things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss. What's up, everybody? We are currently live with the weekly
trace back down to the order book, and then that price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone.
With the kangaroo toe,
always recommend trading on the 5 minute.
some of these exotic pairs in pretty steady uptrend, making these higher highs and higher.
mostly trend following.
The stimulus in a certain way.
All right, everybody, welcome back to the show. I am excited today to bring on a very special guest. Kaci, how are you doing?
I'm good, Nick. Thank you for inviting me. I'm glad to be here.
You're very welcome. I'm sure the audience will be excited to see a new face. We're always trying to bring new people. And usually what I do is I sort of just scout out anybody who has like a down-to-earth, realistic approach to this stuff and just invite them on to share some knowledge with us for free. So that's the whole point of our channel. So again, very happy that you're here. Kaci, before we jump into anything, can you just tell everybody a little bit about yourself? How'd you get started trading? Where are you from? Things like that.
For sure. I am from the Metro Detroit area, and I was introduced to this whole game of Forex probably about 4 years ago. I had a friend who was posting on Facebook like the screenshots of the profit he was making. And initially I'm like, okay, this can't be real, because I think he said he had made like $2,000 in a day or something like that. And after seeing it a couple weeks, I'm like, okay, I need to find out what this is. So I reached out to him. And he invited me out to a meeting, and he was a part of IM Mastery Academy. So that's how I got exposed. After a little while of being in IM, I realized that it was not necessarily the right fit for me. So I started working with a mentor. His name is Benny Allen, and then also my trading buddy, Ryan Carthage. And we started getting together on a regular basis, marking up charts on the weekends. We go through 28 pairs, and we do it with our group on Facebook called the Forex Trade Room. And yeah, so that's kind of how I got started. And now I'm here.
Awesome. Well, I'm glad that you're here now. So that's very cool. So I think that a lot of people do get introduced to Forex through some sort of MLM. I think it's just because it's such like a networking thing, like their whole point is to introduce and bring people in. So it's always cool, to hear where people come from. Because some people, oddly enough, I did not come from an MLM, which I'm in the minority there. Because like most people I meet, they're like, oh yeah, I got up with IML, and then I realized like, it's not for me. And then they leave it. So I don't know. Everyone's got their story, but cool to hear it. Kaci, what I'm going to do is I'm going to give you the floor, because I'd really like to see what you got going on. Obviously, you've got some good content already, so you know your stuff. So with that said, we've got your screen set up. What I'll do is I'll change it over to this view here.
Okay.
And then I'm going to back out, give you the floor. I'm going to listen. Let's let everybody listen to what you have to say today. It's your turn, and we will go from there. Does that sound good?
Sounds good.
Cool. And whenever you're done, just let us know, and we'll shut it down for you.
Will do.
Cool.
So before I get started, I just kind of want to lay like the framework and the groundwork of how I trade. I am a swing trader, and what I do is a multi-time frame analysis. And so the basics of what I do is covered here. So on each time frame, I typically start off on either the monthly or the weekly. Sometimes the monthly doesn't give me enough information, so I have to go down to the weekly. But I look for swing highs and swing lows. And a swing high is simply like a 5-candle formation where you have a high center candle, and then you have 2 to the left that are lower and 2 to the right that are lower. Sometimes it might not even look like this. You might have like a really high wick, short bodies. But if the basis of it is the same with the 5-candle formation, high center point, then that's considered a swing high. And then for the swing low is the inverse. You have a low center candle. You got 2 candles to the left that are higher and 2 candles to the right that are higher. And so this is what I look for on each time frame. There'll be several levels, but I try to identify the most relevant ones on each time frame. and work from there. Now over to this side of the screen, I have set up what I'm looking for and how I trade. I am a technical trader. I really just started getting involved in the news. And so I use Fibonacci, and the market moves in waves. That's what we know it to do. Unfortunately, it doesn't move just straight up or straight down. We'd all be rich if it did that. But so I use ABCD based off of Fib. And so the A would be considered my swing low. The B in this scenario would be considered my swing high. And then the C is typically where I enter. The D is going to be where I take profit. And so the A and the B, once they're formed, that swing low and that swing high is formed, the C can float anywhere between the A and the B. That would mean also that the D floats too, according to where the C stops. So I'm going to pull out my Fibonacci tool. Now, I know that TradingView has a Fibonacci extension tool and a Fibonacci retracement. I've kind of just like combined it to make it easy. I like really simple things. And so I'm just going to pull it out and show you guys. So I go from my swing low to my swing high. And in this scenario, what you see, like you see that I have my levels and I have them color coded. I'm sure you're probably wondering like why. So again, I like simple. So basically, these positive numbers are retracement levels, which are your entry levels. The negative numbers up here are your extension levels and your take profit levels. So the reason that they're color coded is because if price comes back to the 38.2, the 50% fib level, or the 61.8, I'm anticipating before price even makes it all the way up here, I'm anticipating that price is going to take profit at this D extension. Now, I typically draw a zone because I understand that price doesn't come to a line, it comes to an area. And so that's the explanation behind the color coordination. So if price were to, and I'm just going to get rid of this circle. If price were to pull back to, let's say, the 78.6 fib level, then my C would adjust and also my take profit would adjust. So that would be the D here. And so I would enter at the C, know that I'm taking profit at this level. Now, in our group, what we like to say in the Forex trade room is that the C is the lowest point between the A and the B. And that if the C does not take out the A, meaning price does not surpass where the A is, then the trade has no choice but to go our way. So if we're in a buy, and let's say you limit in on the 61.8, even if price pulls back to the 7.86 or the 8.6, but you get that support and start to make your way up, like the trade is going to go your way. So as I set this up, I position myself, like I'll set up my charts on the weekends, and sometimes I limit into positions, and my sweet spot is this red area. So 38.2, 50, and 61.8, but ideally I like to enter at the 61.8 because it gives me the best risk to reward ratio. And so I can limit in here and then be ready to take my trade all the way up to the D extension, which is here. And then I place my stop just below the lowest point, the A. And so I factor all of this in ahead of time before I take the trade so that I know going in what I stand to lose, so that I'm not like babysitting my phone or babysitting the charts all day. I've noticed that when I do that, like I lose more money than I make. So I like to set my charts, let them go, and then go do what I got to do. I know that, entering this trade, I stand to lose, let's say $25. That's fine. I'll go do what I got to do. Best case scenario, I win and I get a little bit of profit. Okay. And so let me delete this fib and let me go to the sell opportunity. So this is the same thing that I drew, just the sell opportunity. And when you're measuring the fib, you go from the swing high on the sell opportunity, the high to the low. And in this instance, it's at the 78.6. So I know that I would be prepared to take profit somewhere around here. And then again, to set this up as far as risk and making sure, to making sure that I position myself correctly, I calculate my position size based off of my stop loss. I don't trade like whatever position side I want to size I want to trade, like I set it up based off of what I'm looking at in the market. So if that means I have to trade a 10-cent lot, that's what I have to trade um, uh, on the setup. So this would be the entry, and then I know that this would be the take profit. So I'm going to show you a couple of trades that I got into over the last 2 weeks. They are all JPY. And I know a lot of people often ask, like, how do you trade like 28 pairs? Like, what size is your account? And it's not like I take all the trades at the same time. But what I've noticed is a lot of these move in the same direction. Like a certain JPY. If I look at JPY pairs, and I know, some of them are moving very similarly, so I can capitalize on the opportunity by taking advantage of what it has to offer. So I'm pulling up CHF JPY. I have a video on my channel that I did 2 weeks ago, just before the news that happened on this one. And I go through, and I'm gonna mark up a chart at the end, but I go through and I identify my levels. And so you see here that I have everything color coordinated. And because I trade a lot of pairs, and because like I'm looking at the chart relatively quickly, trying to figure out what's going on my phone if I haven't limited in, I color coordinate everything. I don't know if people know, but you can set up templates in TradingView. And so I've got all of my templates saved down to the color, the text that I want to appear, so that I can quickly go through and analyze what I'm doing. So I've gone through this process. I've identified my major key areas. And on this one, I knew that we had hit what we call it the D extension to the upside, and price had been on an uptrend for a year. And so I knew once we hit that D extension, and you'll see, usually I'll do my levels, and then I go through and I do my fibs. So I walk all the way up with my fibs. So I have an A here at the bottom. My B high is here. My C retracement is circled. And so I would have known going into this trade that I am prepared to stay in this trade for the next 600 pips on buys. So either if you swing trade like that, you could stay and hold the trade that long, or you can say, I'm taking buys up until this level. I know that price is going to increase. And so I'm looking for buy setups all the way up until this level. And so we see that we entered here on the C. And if we look over to the right, we hit that zone. We fell short just a little bit. And again, that's why I enter zones and not necessarily the line. And then I also enter the fib on my MT4 with my broker, so that it could reflect the right price based on, spreads and everything affect take profit too. So once we have this sequence finished, then we start it all over again. And so I would go from my C, that would become my new A. I would go to the D extension. That was my last high, which was here. And then I count down. So I got A here. Let me type this out to make it clear. I've got A here at the bottom. And then I've got B as my high. My C is going to be my entry. I know this looks a little junky. But I've got my C here. And so based off of this setup, you'll see that price pulled back to the 786 level. And so I would anticipate that I'm taking profit at the D extension, which is the matching color. So 786 is blue. That's a retracement level. My take profit level would be here. And so I know that I'm bullish again on this pair for the next 600 pips, right? And so once that finishes, that sequence finishes, it starts all over again. So I'm going to take this out, and I start from my last C, which was here, which becomes my new A. And then I take it up to my D extension. That's my high, which is a B. And here, what I found and what our group has found is that when price makes a shallow retracement, and what we call shallow is like a 236. This is a very shallow retracement. We typically see, you see price didn't even retrace like all the way down to the 236. We typically see price stall out at the 2.7 extension or the 1.8 extension, which is exactly what happened here. And so when that happens, we look for price to retrace to a deeper level before we can see like what's going to happen. Is it going to continue to go down, or is it going to continue to go up? So after that shallow retracement, I anticipated that I was going to see price drop. And just looking at market structure, not looking at a fib, I knew that this was past resistance and that price had broken above this level and stalled out here. And this was an untested level of support at the time that, none of this was here, right? And so I knew at least we were coming here. That was about just under 400 pips, I think. And so you'll see that I've got my trend lines drawn too. The way that I draw my trend lines is pretty much from swing low to swing low and swing high to swing high. And so it tells me the momentum and the direction of the market. And so the way that I would have entered this trade is after I've drawn my trend lines, then I go down to a lower time frame. And what I'm looking for is a bearish break of the trend line to the downside. Then I'm looking for price to come back and retest the backside of this trend line and then make its way down. So my entry on this trade was in this zone. You have a really good risk to reward ratio by trading this way. And that way you can also take a little bit larger position sizes, again, staying within the bounds of your risk management and your plan of what you have. So what I'm looking at on CHF JPY, if all the stars aligned and everything went the way I wanted it to go, I would like to see a continuation down on this pair because price came to the 23.6 level. And again, I safely trade. I trade trends. I trade counter trends. I trade, anything. So with counter trends, I know that I can take price at least to the 38.2 level before we have a significant reaction. So I would like to see price come back down at least to the 38.2 level before I decide, what else I'm going to do. So what I did here, hold on, let me take this off. Oh, I measured my swing high to my swing low, and I see that price, hold on. I see that price retraced into my sweet zone, which is the 50 to the 61.8. It didn't quite touch 61.8 yet, but based off of this projection, it looks like the take profit area would be here, which is a zone that I drew previously based off of the high probability reversal zones that I saw. So I knew that my take profit would be here. This is in confluence with the higher time frame fib level. So I've got my fib drawn up here. This is the 61.8 level too. And so I would like to see price continue down. That would be for about 400 pips. And we see that price is rejected off the backside of this trend line too. Assuming that it continues to reject off of this area, I would anticipate that we're probably going to see a take profit somewhere down by 116. And again, like I'm a technical trader just getting into the fundamentals. There's always news that could propel the trade into the setup that we see or cause it to go a different way. But if price breaks above this trend line, I could anticipate based off of, let me delete this fib. Hold on. Okay. So based off of the current fib that we're in, we could see price go back up to this 2718 area, extension area, or we could see price even go to the 618 off of a 236 retracement. And so I would like to see, though, I would really like to see it sell off to this area. I'll publish a chart too for this one. Now I'm going to look at GBP JPY as well. I don't know if you guys can see, but this looks very similar to CHF JPY, which is the last setup that we did. And I'm just going to hide this fib. Let me go back. Okay. So again, once I identify like my key levels, then I go in, I draw my trend lines, and then I do my fib. So here I've got my low here. I've got my high here, which is B. I've got my pullback here, which is C at the 50% fib level. So I know that my D extension, what I'm targeting, if I was trading off the 4-hour, I know that I can take buys or either swing this all the way up. That would be a really long hold. So I'd probably just look for buy setups all the way up until this extension before we have to analyze and figure out what's going to happen from that area. So once I do that, then I start the sequence over again, and I'm going to get rid of this fib. And I start out from my low and I go to my D extension, which is here, my high. So this C would become A. This would be my new low. This would be my high. And then again, we had barely any type of retracement here. And so I would consider that a shallow type retracement. And so again, when that happens, we typically see price stall out at the 2.7 and the 1.8. And we would see price make a deeper retracement majority of the time. Not all the time, but majority of the time. We'd like to see price take a deeper retracement. So on this trade, I knew that we had hit a D extension at this 155.50 level. And so I was waiting to see price break my trend lines. Let me zoom out. I was waiting to see price break my trend lines on the bearish side. And so once I got the break, you actually see the break right here. And then it came back and it retested. This would have been a great entry for this sale. And then I would have placed my stop above the last high. And so I would have known too, hold on, let me zoom out, that on this one, looking at this just structurally, that there are a couple levels that we have to pass through. And just like CHF, JPY, I'm looking at this and I see that we broke above this area, which was past resistance, but price hadn't come back to retest it for future support. Now, the deeper retracement, though, on this one, I would trade this at least to the 38.2. So again, if all the stars aligned and everything worked out, I would like to see a long-term sell on this pair, at least to the daily 38.2, which is here. And that's 1,100 pips. So again, like swing trade net, that would be, yeah. You could either just say, I want to take sell setups all the way down to this key level of 143.365 before I start to look at price changing direction. Now, before we get through there, though, price has to make it through this zone, this past resistance zone, in order for it to make it to this level down here. So on Gbp Jpy, I am bearish, and for the short term, I see a potential sell opportunity for about what is this? About 400 pips, maybe 500 pips on this setup. And so I'm actually in a sell on this one right now. So that's Gbp Jpy. And then for Euro JPY, I'm actually going to do a full markup on this pair to show you guys the process that I go through. I'll go to the monthly. And I know a lot of people ask me, like, how are you able to tell what's going on if you got the chart like squeezed out? I'm able to identify like swing highs. I look at structure so I can see it and identify it real quickly. But on the monthly, we currently don't have a swing high. We have the two candles to the left that are lower, and then we have a center candle, but we don't have the two candles to a right. So this can't be considered a swing high right now. So I would go to my last swing high, and I'm gonna get my horizontal ray tool, and this is a swing high. And so I'm gonna double click and change this over to long-term resistance. And I'll go in and draw the zone. And I usually go from the top of the wick of the candle to the top of the body of the candle. And then I'm going to stretch this across. There we go. That's my zone. And so I'm going to identify my swing low. And I see it right here. I got the low center candle. I got two candles to the left that are higher and two candles to the right that are higher. And so I'm going to draw a zone here as well, because again, we know price comes to a zone and not a specific line. And so I'm going to stretch this across. Did I label this? I don't think I labeled the line. Actually, I'm going to leave it be because, oh, wait, here we go. We're going to do long-term support. All right. And then I'm going to drop down to my next time frame, which is the weekly. And I'm just looking for the same thing on this level. And I'm just going to clean this up. I'm really a stickler about my charts, and I don't like messy charts. So I try to make them a little bit neat. And so what I'll do is I'll look for the swing low and the swing high within this boundary, and adjust. So this would be I'm on the weekly. So this would be weekly support. And then I'm going to draw my zone. I see there's a candle back there. We're going to stretch this across. I'll call this my weekly zone. And then I'm looking for my swing high within this boundary, and I have it here. So I've got the 5 candle formation. I got the high center candle, 2 candles to the left that are lower, and 2 candles to the right that are lower. And so this zone, though, let's see. So I'll cover here to here. And I'll stretch this across. Perfect. And then I see another level too. So I'm going to identify that as well. And then I'm going to drop down to my daily. And so I've got my low here. I got my next high here. And if I just put a horizontal line on this, I can see that price has been resistance in the past in this area. So you've got it here. It's been support in the past too. And so, yeah, this is a level I want to pay attention to. So I'm going to mark this out because this could be future support. So I'm going to grab my horizontal ray and identify this. We're on the daily. So I'll do daily support. And I'm actually going to move this down just a bit and then draw my zone to the top of the wick. And that should cover that area. And stretch that across, label it my daily zone. And then I'm going to drop down to the 4-hour. And I'm looking for, actually, I see some more levels that I want to identify here. And so I've got a low. Actually, let me move this down just a bit. Got a low, I got a high, and then another low. But I want to, this is resistance, and this became future support. So this is an area here. We'll call that 4-hour support. So let me fix this. And then I'll draw my zone for my 4-hour here. And I'm going to take it to the bottom of the wick. And then we will call this 4-hour. Let me add a 0 to stretch it across. And let me adjust this too. And change this to daily. And then do the same for here. And change that to positive. I just throw any number in there. It'll max out where it's supposed to. And I'm going to change this to weekly. All right. Okay. And so I've got my key levels identified now. Now I want to take my fib and just see where I am. So I have my A, my low, my high, my retracement, which came to the 50% fib level. So I would have anticipated that price was going to the D extension, which is a level that we identified as a key level, which is confirmation here that this is a take profit. This was what? That was 1100 pips. So once we hit that take profit, we start the process all over again. So I'm going to delete this, and then I'm going to go from my low to my D extension, which is here. And again, we got, so this was the A, this was the B. We got a very shallow retracement here, which was the C. And again, on that shallow retracement, we typically see price stall out at the 2.7 extension or the 1.8 extension. So it did exactly that. And so what I'm looking at, let me just take this up just a bit. What I'm looking at on this pair, let me throw in my trend lines. Hold on. So I used array. Drawing trend lines was a little bit difficult to me when I got started trading. I didn't know how to draw them, and I would draw through candles and everything, and your trend line is not supposed to go through your candles. So I use the array now just to keep everything straight. So I go from swing low, and then I stretch it out, and I take it up to the next swing low, which was here. And then I take another ray, and I go from that swing low to my next touch, which is here. And then as I'm getting down to figure out if I want to enter based off of that trend line break, the swing high, and the test of the the test of the backside of the trend line, I'm going to draw from my last low, which is here, to the next touch, which is here. And so let me drop down. I don't know if this will carry through. Settings. Visibility. Yeah, it should. So I'm going to go down, and it doesn't. So let me draw it from here so you can see. That was it there. And then I'm going to draw from this last touch to my next touch, which is here. And so what would have been looking for on this would have been the bearish break, and then you let it form a swing low, and then get your pullback. And this is probably like a 61.8 pullback. So let's see. Yeah. So it fell shy of the 786 pullback. This would have been the entry on the sell. And I actually caught some of this a couple weeks ago. That would have been the entry. And then I would just let it go. So right now, what we have going on is, hold on. What we have going on is price has made its way down. It hit an extension on the, let me see. It hit an extension. Hold on. So we hit the extension on the pullback. So price made the high, then it made the first move down. It pulled back, and we hit an extension on the downside. And so I was waiting for a swing low. So I traded this down, and then I also traded the move to the upside as well. So I mentioned before that I trade counter trend. I also trade, the regular trend. And I know that typically I can trade to the 38.2 before price starts to have a reaction. And so I was able to capitalize off of both moves. But what I anticipate on this pair is, let me back out, is I would like to see, because we got that stall out and we got that very shallow retracement, I would like to see price come back and make a deeper retracement. So I'm going to grab my trend line tool just to show you guys. So we tested off the back. We broke the trend line. Then we came back up. We tested off the backside of this trend line. And now we have another level of untested support here. And so I would like to see price make its way down to this zone, this area, 127, in between 127.4 and wherever I have this drawn. But we'll see. I'm going to take this off. And I'll just draw out what we have. So I drew from the high to the low with the fib. Price pulled back to the 618, and the D extension falls right in line with the area that we identify visually here. So it's at 127.53. So I would do somewhere between 127.53 and the 127.4 or 3 that popped up before as my potential take profit. So on this setup, you're looking at, I entered here. You're looking at a potential of just under 500 pips for this. So either you could swing it, which works for me and my lifestyle, because I still work a regular job right now. I can't be on the charts. So I look for these type of setups, and I let them ride out, let them go. And then I'll just adjust my stop loss and move it into profit as it continues to make its way down. So that is pretty much it of what I have for you guys today. Again, I mentioned I'm very, very technically based, and adding in the fundamentals, which Benny and Ryan, they do a very good job of, and they're teaching me that right now. It just gives you an extra edge in the market. So I hope that this has been valuable to somebody today, and hopefully we see the continuation down on these 3 pairs and catch a lot of pips.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today, and also subscribe to the One Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to enter and exit positions with lot sizes that are calculated for you, suited to your risk management settings that you allow for the tool. This is a big thing because a lot of us struggle with over leveraging or accidentally taking a position size too big, and Risk Calculator is there to help. Like I said, with the click of a few buttons, you're able to set your trade, and the lot size will automatically be calculated for you so that it suits your risk management plan. In addition to actually setting your trades with the proper lot size, it also allows you to manage your trades as they're going along. Things like trailing stops, moving stops to break even, or even partial take profits are all tools or features available with the Risk Calculator functions that are available on MetaTrader 4 and MetaTrader 5. If you're interested in checking out Risk Calculator, there's a link down below in the description. And if you use that link, it does help to support what we do here on the channel, which is provide free trading content, again, by the thanks to the help of our sponsors. So thanks so much for watching today. Again, make sure to subscribe to us here on YouTube if you haven't already, and we'll see you back in the next one.